Are you ready for a cherry bomb trade that isn't contrarian? Good, because today's trade involves FXI and is actually trying to follow the news. So if you're ready to get your cherry bomb trade on, meet me in the platform. Hi everybody, it's Neil here again, and it is May 5th, Cinco de Mayo, right, 2020, and we are ready to put our cherry bomb trade on. And in case you don't know what that is, cherry bomb trades come from Tasty Trade. The link is in the description below. Head on down there and you can give Tasty Trade your email. They'll send you these trade ideas 4 days out of 5, and we put them on in a simulated trading account. And if you like that kind of thing, I'd love it if you'd hit that subscribe button and ring that bell. It'll let you know when our videos come out, and you can test your option theories and see if you're ready to get trading with real money someday, right? So here we go. We're going to be inside of our Thinkorswim platform. I'm going to set my account to margin just because I like doing that. And what I'm going to do here is pull up the charts for FXI. So if you don't have this in here, type FXI, hit enter, and you're going to see your year-long or 52 weeks, right? Candle chart, and we can see here that as it describes in our cherry bomb email that came out this morning, this ticker has come down quite a bit. This said almost 2 standard deviations down, and so rather than doing what you would think, right, you would think Tasty Trade is almost always contrarian, that if something's gone down, right, we buy into weakness, we sell into strength, etc. So that's not what's actually going to happen here. So what we're going to be doing is putting on a short call vertical up around this general region that says we don't think in the next 45 days that FXI is going to go any higher than this general area, this line here. And for you technical analysts out there, right, you might say that, okay, look at this previous resistance here at this number. So, or you could say, look, here's some previous support. That support could become new resistance. So, I don't know, the tea leaves, if that's going to mean anything. But let's take a look at the probabilities by building this trade. So let's go over to the Analyze tab. Let's click on Simulated Trade. We're going to the June monthly expirations with 45 days to expiration. We're going to scroll on down. I have my strikes set to all. So if you can't see the same strikes that I see, make sure your strikes are set to all. And we're going to come down to the 39 strike price. We're going to right click and I'm going to choose Analyze Sell Trade and choose a vertical. Then what we're going to do is, I like to bring this up a little bit and make it easier to see. We're not going to do a $1 wide vertical. We're going to make it a $2 wide. So we're going to take this long, which you can see is +1 here. And if you're, say, 10, right, you want to adjust these to a size that you feel comfortable with. We're doing just one contract. And down here, we're going to change this to 41. That makes it a $2 wide, right? So at most, you're risking $2 times 100 is $200. And you're going to subtract from that 200 the credit you received, which is roughly 1/3 of the width of these strikes. That's Tasty Trade mechanics for you right there. Okay, so I want to take a look at the trade in a risk profile. So I'm going to hit that over here, risk profile, and we're going to be able to see some confusing stuff, right? For those of you that are new to this stuff, all these things here that are called price slices are all messed up. In order to get this right, here's what we do. Here's what I do. You can do whatever you'd like, right? So I click this and I set it to June 19th, which is the expiration for that we're selecting here. And you can see that that made this gray area, which represents the 1 standard deviation sort of expected move within 1 standard deviation in the time that we have. And then I want to set these what are called price slices to break even. So rather than dragging them and whatnot, what I'll do is click here and choose set slices to break even at expiration, and then that gives me my probabilities, right? So I benefit to this side, to the left side. I'm saying that I don't want FXI to go higher than this. I'm looking at a 67, if we round up, percent chance of at least breaking even, right? Only a 33% chance that I'm going to lose on this trade. Now, you might like those odds, you might not like those odds, and that's totally where it comes up to you as a trader. If you wanted to improve your odds, you can do things like changing your strike prices, right? I'm not going to do that. I like putting on these. This is, I would say, the numbers that I'd like to see. And if you get that Cherry Bomb email blast, you'll also see that they give you a Tasty Trade or Tasty Works, whatever you want to call it, metric that they call P50, which gives you the probability of making 50% of the maximum profit. One of the ways in which Tasty Trade differs in their mechanics is they don't want you to let your winners run, right? Where like most people will tell you to do that, cut your losers and let your winners run. So check that out. That's another good reason to head on over and get their email. You'll see that that P50 is pretty high. So with that said, let's always, in my opinion, right click this, choose confirm and send. You can review your max profit, your max loss. You're risking $140 to make $60 with, of course, that kind of risk to reward. You get better odds than if you just bought the shares, right? So with that said, I'm going to click send. That's going to put it over in my working tab here, and we will hopefully see that fill, and we can add this to our Cherry Bomb list of fill trades. So you can see this is what we do almost every day. So please join us if you like. Thank you for joining us this time, and hope to see you again in the future. Bye for now.